Okay, good afternoon. Today is October 15th. This is the weekly take on the market. I'll be your host. My name is Scott Sinclair. I'm the manager of the Premium Product Group here at Investors Business Daily. Here is the disclaimer. Take a moment to read that. We will talk about stocks. No buy or sell recommendations, all for your own benefit to learn on your own. Okay, great. Thank you. All right, so the gauges, the market, I'm going to have in green. I think the market's, I don't know if it's great, but it's fine. It's going up. It should have went down and didn't. It's kind of how I feel about it. IBD has us in a confirmed uptrend. We had a follow through day yesterday. We'll talk about that. The leadership, it's not broad. There aren't a ton of stocks, but if you are only going to own 8, 10, 12, even 20 stocks, I think you can find that number. You don't, if you want to own 200, might be pretty tough, but then that's a different issue. Maybe you're running a mutual fund. And then hopefully your portfolio is green for the week and ideally green for the year. Hasn't been an easy year. It definitely hasn't been a year like last year. Hopefully if you did really well last year, then part of it, maybe you just want to survive this year. I do know some people that run money that aren't having all that great of a year this year, but they did so well last year that you can't expect to stack that type of performance on back to back. So yet last year was just incredible for a lot of you. I know a lot of you had amazing years, and so sometimes you just want to survive. All right, so we'll go through the markets. Let me just briefly go through this, and then I'll jump to Marcus Smith Live. We'll do the industry groups. We'll talk about some stocks, and then we will do the quote of the week. So bear with me. Let's pull up Marcus Smith. All right, so you should see a chart of the NASDAQ composite. And yesterday was a follow-through day. The NASDAQ was up 1.7%. And the volume, although not that great, was higher than the previous day, which is all you need. And so you have a follow-through day. Now, how do I feel about the follow-through day concept? I think it was designed with the idea of coming out of a bear market. So, something more significant than this. What is this? Maybe 8%. If I pull up the Qs, they went down 8%. The spider went down 6%. So, and I don't have a number. Maybe one day I'll do some research on it, but I don't know if it's worth it. I'll have to think about the risk reward, but how much of a correction do you need before you really want to consider a follow-through day signal? But this is the way IBD does it, and it's the best way. There's no perfect way. It's just the best way. They're not going to miss a rally doing this. They're going to get some false positives. So what? They didn't miss the COVID bull market last year. They nailed it, right? So you can't worry about false positives. You're going to have some. So I know there's some feedback about the follow through day, and I get it. I can play both sides. I think you want more of a correction either down or sideways, and I think then the follow through day is a better signal, a better concept. But you have to have some kind of system designed to get you in and out of the market at least a little bit. I never get completely out, or very rare. And I never go completely in. That's very rare too. So this is the best system out there, and that's the one we use, and it's just timeless. It's worked so much. It's caught every major wave up, and some false positives. So what? Right? You're risking $1 to make $3 or $4 or $5. You don't have to be right all that often in a scenario like that. The S&P back above the moving average. And, honestly, if I didn't know the follow through day system or whatever, I would just say, this is a market that looked like it wanted to go down. I was pretty bearish in here, and it just doesn't go down. What more do you need? And I did the podcast with Arusha and Justin yesterday, or it dropped yesterday, and I did it Wednesday. But if we had done it on Tuesday, I'd have been a lot more negative on the market. Like if we had done the podcast here, but we did it on this blue day, and there was just a lot of good action in some stocks. And so I talked about that on the podcast. You just got to be flexible. You have to be willing to change. This is going to be a tough game if you're not willing to ebb and flow with the market and make your best decision and be wrong, and then make another second best decision and be wrong, and then make another decision and oh, I got that one right. You're just going to kind of keep doing that over and over. IWM, for whatever reason, I keep pulling this up. Just a big old base. Maybe it one day breaks out of this. Yeah, like how long is that base? 31 weeks of sideways action. This one was 42 weeks. It tends to build big bases. This one was 24. This one was 29. I don't know what to make of the IWM. And I think I mentioned in the previous video, if it weren't for this webinar, I wouldn't even pull it up. I do like emerging markets though, because I think, the world will go back and forth. There was a time in like the 03, 04, 05 period where emerging markets were just doing great. You probably heard the acronym BRIC for Brazil, Russia, India, China. And so you don't want to give up on that. It could be a time where that comes back in phase. Jason Zweig, I believe he writes for the Wall Street Journal, and he's written books before. He talks about the home country bias. We all have a home country bias. Most of us, I'm sure, invest mostly in U.S. stocks, if not all. But they're Tencent in China, or ASML in the Netherlands, or what are some of the, Adyen, I believe they're in the Netherlands as well. I've owned stocks in London on the Hong Kong Exchange, in Japan. It's very little, not that often, but I'll go where money will go where it's treated best. So if there's really good action in these areas, the money will find its way there. So this is turning up and acting a lot better. Russia is one of the only, or one of the very few markets that has held up with the US market. I think I read in the last 3 years, it's actually, I don't know if it's the last 3 years, but in a like a 2 or 3 year period, it was actually outperforming US stocks. And you can see, got slammed on the COVID crisis, of course, but this is, 15 to 35, more than a double. And then this is a country ETF, Indonesia, that I own. And not just, you can kind of use the follow through day concept. This is 21%. This is 39 weeks, long enough, right? So you have a long drawn out period, and then, maybe you consider this a follow through day. This is actually when I bought that ETF. I don't know. I think I had a declining tops line on it like that, and the alert went off, and I bought it. And I'm of the ilk of George Soros. I like to shoot first and investigate later. That's his quote. It's worked pretty well for him. So I'll buy it, and then if it starts to go up, I'll give it more money. And if it really starts to go up, I might start to do some research as far as investigate why I should keep it. If this was a stock and was up 8 or 9 days in a row, I'd be looking to maybe peel some off or sell. But maybe something's changed. Maybe there's some dynamic change. I mean, how often do markets go up 2, 4, 6, 8, 10, 12 days in a row? 12 days in a row. Every day since I've owned it, it's been up. So maybe there's a big change, and maybe it does something like this. 20 to 25 is 25% in an index. That's a major move. So that's something that I own that's not US, that home country bias. Let's go to the industry groups. And before I do that, one last thing. If you want a reason to be nervous about the market, ARK looks terrible. It looks very toppy. you have a big, base. It reminds me a lot of like the NASDAQ top. You break, you try to rally, you go sideways for a long time, and then you roll over. So I do keep an eye on this one. So let's see if I can set that up a little bit better. So big rally, you break, you try to rally, you try to rally, you try to rally, and then you roll over, right? So which is what happened with this one. And again, I'm not predicting that that's going to happen. I'm just open to the idea that anything can happen in the market. And so ARK reminds me a little bit of this setup. So it keeps me from being uber bullish, but I'm invested. I have positions. You break, you rally, and you're sitting here. And then if the analog will hold, the next leg lower, or the next leg should be lower. If it somehow got above all these moving averages, that would totally break the precedent, and that would make me even more bullish. Tesla, I thought the same thing about Tesla. I thought, you know what, it's going to go down. It looks like the analog to the NASDAQ, and it's just grinding higher. It's just grinding higher. Another great bellwether for the market. It's hard. I've always said it's hard to be bearish on the end of the cycle if Tesla is holding up. It's like the poster child for the market. Nvidia is definitely one of the great stocks, poster childs for this market. Not as controversial as Tesla, but an important bellwether as well. Holding up. It's not doing a whole lot, but it sure is holding up well. All right. Sorry, I went off on a tangent, but I thought of that quickly. Industry groups just filled with energy sector, coal, U.S. exploration, finance, consumer loans. That's Upstart. Upstart's probably the best stock in the market. Canadian exploration, international exploration, oil and gas drilling, machinery, transportation, pipeline are moving up the food chain. As far as CanSlim groups, you've got tech services, Task, for example, security, Zscaler, CrowdStrike, computer software, enterprises, a lot of names in there. I think MDB might be in that group. So there are some groups that you could fish if you're strictly looking for that type of stuff. I do own a large composition of my portfolio is in oil and gas, but I'm not, I think I own maybe 5 names. I'm not over my skis, not on margin. And in my cash accounts, I'm probably, I don't know, 60, 70%. I don't even know. I don't track it that closely. I don't want to be influenced. I don't want to be robotic about it. If I feel like the market deserves more of my money, I just keep putting more in. And at some point, my broker will say, you have no more money in a cash account, or it will say, it'll reject the trade if I try to go, more than 200% margin. It's usually the way I know if I'm starting to get over my skis. And also the change, if I feel like my account's moving so much, both good or bad, that's good feedback too. If I'm starting to really make a lot of money, sometimes I think, either the market's so good that maybe something's going on, or maybe I'm just really, really heavily invested, concentrated. Maybe I should take some off. And believe me, it works the other way too. All right, so let's look at some stocks. ODFL is in the near pivot list. I pulled up that. You've got a relative strength new high. It's a trucking stock, but big earnings and sales, accelerating earnings. Maybe you don't make 50% in it, but it seems that this could be an idea. This move, maybe that was 10%. This move more than 20. This move stopped out. This move stopped out, but then it righted itself more than 20. That looks like about 15. So it's not a bad trading stock. Or if you know this business, I wish I did, and you just bought it there and said, you know what, it's going higher. You're up threefold. I don't do that often. Honestly, very, very, very rarely. Once in a while, I will try to stay with something and just leave it, but it's not really my core competency. What other? Oh, GTLB. I know it's a new issue. It needs a base, obviously, but I like to see this type of strength. priced at 77 in an IPO, currently 115. If the institutions were worried about the market, the animal spirits, so to speak, wouldn't be out there. I know it's just a single name, but it's important. It is a hot IPO, and if things were bad, it would open at 80 and do this. The fact that it opened near 100, held all day. Today, it actually tried to go lower. I was watching it. I think it got as low as 93, and then just came right back and closed right on the highs. So from a standpoint of market sentiment, I like to see that type of strength. I was on the podcast that dropped yesterday and Wednesday. I did that. Today's Friday. So I talked about Bill.com bouncing off the 10-week line. Super good institutional sponsorship. Watch the podcast. I'm not going to, let's, for the sake of brevity, I'll just mention the stocks. Bill.com, MDB, stock I don't own, but wish I had. I like the undercut of this low, gaps up, 30% on earnings and 26%, then undercuts that low. And this is what I love is like at that point, if you look at that chart, let's go through this. That is 10-2. Remember 10-2, the market was bad that day. I think that probably, it was probably, or 10-4. So it must have been a Monday. The market, terrible day. And, that looks like a stock that's going lower, right? You got all the people that bought the gap and they put their stop here. They're done. They're stopped out. And then you got a big volume bar. Anybody looks at a chart, it's going to say that stock looks like it's going lower. Excuse me. And then it can't. And I love that type of action. And I didn't buy it because I didn't like the market at the time. And I had a couple of high octane stocks. And so I didn't want to have too much exposure in those stocks. I had AMBA, I had Bill, and just those two alone can give you heartburn on a bad day in the market. So I didn't want to add a third, but it held up pretty well. So that acting pretty well. And there's AMBA, which today reversed, but it had a really good day yesterday. So I like to get more feedback from the stocks versus the overall market. I think it's a better mechanism for how things are going. And then last but not least, on the podcast, I talked about Valaris. It's an offshore oil and gas driller. And been in this one for a while. I just have this vision that it's going to go to the moon. And I survived this shakeout, right or wrong, because I have this vision. I was buying the Jesse Livermore undercut when it, undercut those lows and then rallied. So I was doing all my buying in this area. So I was able to survive that. A few days ago, it had a little shakeout. I was able to survive that. And like I said, most of the time, I like to sell into strength. If, any of you have known me or hear me on IBD Live, I like to sell into strength. But sometimes, I would say on average, 1 in 4 trades, 1 in 4 winning trades that I have, I will keep them and try to hold on for a big winner. Sometimes I get it right. A lot of times I don't. A lot of times, like, MRVI. I tried, had this one, tried, and then they announced the secondary, and the stock just does not like the secondary. And it's down 10% that day, and I'm out. And I went from a 30% profit to a 10% profit or something like that, 15%. I don't remember. It's kind of irrelevant, honestly. Bottom line is I tried to make more and had a plan that it didn't work and got out. So that can happen, but so far so good with Valaris. Is up 28%. And I've been getting a lot better. And one of the things I've been focusing on is having this imagination, this vision that an index, an industry, a group, a country ETF, a stock, a company can go anywhere. Oil went negative very briefly, negative $25, $30 a barrel. Now we're sitting in here at 82. and maybe it's going to go ludicrous mode the other way. So negative in hindsight was ludicrous, right? Maybe it goes ludicrous to the upside. 100, 150, $200 a barrel. I don't know. Why can't that happen? I'm not saying it's going to happen. I'm not predicting it's going to happen. And I'm not going to make the bet that it's going to happen. In other words, if it doesn't happen, I'm going to lose everything in Valaris. If it just turns around and just crashes and burns, I have a plan to get out regardless. But you should have. I've been amazed in the last, especially most recent years, at what stocks and what indexes, what markets can do. Bitcoin, I've missed that train. Incredible upside move. GameStop, AMC, silliness to me. But the bottom line is they went a long way. They went a long way. And Tesla, I have a friend that I just talked to yesterday, still in Tesla. It's up tenfold probably in it. And he just not going to sell it. Now, the hard part about that is if you're going to have a really big winner, and I was talking to him about it, you're going to have to ignore some sell signals along the way. And then eventually you're going to get a real sell signal, and you're going to ignore that one. So you might have to get 2 or 3 sell signals stacked on top of each other before you finally exit a really big winner. But, normally for me, that would be a sell signal. I would be looking to sell it. Normally for me, that would be a sell signal, right? It's gone a long way, and then it looks like it might be rolling over. It's just time to exit the trade. So even though these are very short-term signals, for me, if I'm going to have a big winner, I'm going to have to learn to ignore some sell signals. So you have to think about that if you're going to try to hold on to a really big winner. We have all these stocks in our database at William O'Neill and Company, and there's doubles, triples, 10 baggers, and they start here and they end there. And in hindsight, it looks so easy, but along the way, there's so many wiggles and so much turbulence that having the right position size, having the imagination, the vision that it can go a lot higher, and knowing the story, will help with your conviction for riding through that, if that's your objective, if you're trying to have a big winner. All right, so let's go to our quote of the week. And it's perfect for the podcast, and that imagination vision I talked about is Bruce Kovner from Market Wizards. And he says, I have the ability to imagine configurations of the world different than today. Now, Bruce Kovner is one of the great traders of all time. I mean, compounding 30, 40, 50% year after year after year. I actually think his numbers might even be higher on real money. It went in the earlier days. Now, when he got really, really big, it's going to be, you have economies of scale. It's going to be very difficult to do that. But he just says, I can see soybean prices doubling. I can see the dollar falling to 100 yen. So he just says, I have the ability to do that. And that's one of his traits. And I think it's a really, really strong personality trait for markets, because you'll never be totally surprised by something. And that will obviously help you the other way too, because if you can imagine something you own going down a lot, if something bad were to happen, you'll be more willing to take the loss at 4, 5, 6%, because you can say, hey, I can imagine this going down 50%, 6, 7, 8% is not bad at all. And then he says, second, I stay rational and disciplined under pressure, which is important too. So that's it for today. The podcast is on Investing with IBD. You can find it on investors.com's website under the video section, I believe. And it's on, I have an iPhone, and so it's on the iTunes or the Apple Podcast button. You can subscribe there. The video online, it's a little better because we do pull up charts on there and you can see them versus obviously listening on the podcast. Okay, that was my shameless plug for Justin and Irusha, two of my friends, and for myself, I guess, a little bit since I was on the show. Let's go to the contact information. Reach us at marcussmith.com, 800-831-2525. Have a great weekend. I do not believe there will be a stay in step next week. I am going to be out of town. If I can, I will do one from the hotel if something needs to be done. If the market has like a big change and I feel like there's something to talk about. Otherwise, I'm going to pass on it. So just an FYI. Have a great weekend, guys. Thanks a lot. Bye-bye.